Hello traders, it's Friday, April 14th. We're about 3 hours into the trading session, so let's get started. We'll take a look at our last two picks that came out Sunday night. We'll do some market analysis, and then we'll find a couple of other picks. I still plan on doing a Sunday video, so I'll try and keep this one a little bit on the short side, more focused on lessons than anything else. So my bias going into the week was I think that the market's getting overextended on the upside. I still feel that way. We did make a new relative high this week. I also feel that the market's due for a pullback, and we're getting one right now. So we're going to get into that. For that reason, though, I've been keeping my swing trades to a minimum. We're really focusing on day trades. So I've been giving you a long and a short in each video. So my long Sunday night was Oracle, and I gave you the context for that trade and what you need to look for on a daily basis. You can see that Oracle actually did make it higher for the week, but you had to be selective with your entry points. And so if we go into, let's say, a 15-minute chart to take a look at the price action during the week, this was the action from Sunday. You can see Monday we had a big drop. There's really nothing here. Tech stocks in general saw a rotation out of the sector. Here we get a nice bounce up. Do you start buying this just right out of the gate on the open on Wednesday? No, I would definitely not suggest rushing into a trade like that. You can see still some weakness. Yesterday, the stock starts to regain some of its relative strength and the volume is decent. See an opportunity there, but today those gains are easily being given back. So you've got to be so selective with your day trades here. The market is seeing some two-sided action. Let's take a look at Caterpillar. That was pretty much a stinker on the short side. Really didn't do much, but I think that stock is going to gain traction because it is a play on a recession looming and that the heavy equipment stocks are going to see some pressure, cyclical stocks in general. So you can see there's really just no opportunity to do much in the way of shorting on this stock. Today you had a gap higher and a gap reversal. That's what the market did. There are actually some better shorts out there than Caterpillar. So let's take a look at what the heck is going on with the market right now. It's been a lot of this light volume drift higher, just some real garbage. This red line that you see passing through is the VWAP, so I'm going to keep that up because we are going to zoom into a 5-minute chart here very shortly. We'll put up the major moving averages so that you can see where they come into play. We're well above all of them, and that is generally bullish. We had a couple of trend lines that came into play, and we broke through one yesterday. There was a downward sloping trend line that came into play right about like that. So we can put the trend lines up, and you can see major resistance coming into play at this level. I had referenced that Sunday evening. So the temptation for most traders is breakout, 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 breakout. We want to trade breakouts because then we have lots of upside. We have room to run. However, it's important to recognize that these trend lines are resistance. Most of these are not going to break out. Even if we poke through like we did yesterday, that still does not mean that we're going to see follow through. Well, Pete, how do we know when we are going to see follow through? Because I love to trade breakouts. Well, the key to that is that you need these long candles and you need really heavy volume. Yesterday, for the first time in a couple of weeks, we did actually see some pretty decent volume yesterday. We had zero follow through today. We have this wedge formation and we have earnings season starting up, which, by the way, banks released this morning. PNC, Wells Fargo, JP Morgan Chase. The reaction was generally positive, and the market is in relief mode right now because we had a bank failure about a month ago, and there hasn't been another since. So everyone's thinking that, hey, we haven't heard of any other failures. Maybe there aren't any. So bye, bye, bye. And so money comes into the market. But if we zoom back in and take a closer look, look at that horrendous volume. This is really bad stuff. Is it particularly bearish? No. But what it does mean is that we really can't trust this bounce right in here because buyers did not get behind the move. If they had, stack green candle, stack green candle, stack green candle, stack green candle, massive volume. We didn't see any of that. In my opinion, this is probably just some short covering. Shorts are a little overextended here. We had possible credit crisis looming. There's no follow through on the credit crisis. The dust is starting to settle a little bit. You get a little bit of upward pressure in the market. They have to scramble and they have to cover some of their positions. That's why it is light volume. That's much different than an asset manager who's sitting back going, oh my gosh, the Fed stopped easing. Inflation came in big time. Stock valuations are actually pretty attractive here. Buy, 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 buy. That is long-term money coming to market aggressively. We're not seeing that. So this is just temporary adjustment by hedge funds, commodity trading advisors. And so, yes, this move is vulnerable because it's come on light volume. And now notice how at a relative high, red candle, red candle. Oh, here we go. Well, this is interesting. This is actually a bullish engulfing candle. Here we go. And through that resistance level, clearly on decent volume. Today, we try to add to those gains. Whap! Smacked down hard. So we're going to take a look at yesterday's price action, and I'm going to give you some tells. And then we're going to look at today's price action. Let's take off these major moving averages so that they don't obscure the chart. And we can see where the VWAP comes into play as well. So yesterday, we had this nice move higher. Well, what would have told us that this was going to be a decent bullish day? Well, we don't really know initially. I mean, it's nice that we gap up. Okay, gapped up higher. We had a nasty sell-off the day before, you can see, but kind of chunky and choppy. So the market gaps up and then it gives those gains back. This is the first sign of trouble. This is the first sign of selling pressure that we've seen recently. And these long stacked red candles tell us that. But what happens after you've had a 1 month rally? Well, buyers are conditioned to buy. You get a dip, you buy. You get a dip, you buy. Well, so they get a dip and they buy. But then they get another dip. Ooh, that wasn't such a good buy after all. So now they're back on their heels a little bit, but we still have one move higher. And yesterday we get this nice little bounce. Okay, that was some pretty heavy selling pressure the day before. Start seeing some tails here. That's a sign of support. And we get a bullish 1OP cross in here. Hey, this is good. We've got a bullish cycle coming. That opening gap has been able to hold. They've tried to slap it down a few times, which would be natural after selling the previous day, but the bid holds. That's the first clue that buyers are engaged here. Okay, now we get a nice little breakout on this bullish cycle. Excellent. Well, now we're still inside the previous day's range, but the volume is decent. Blue line above 0 is decent. So in the back of your mind, you've got to be thinking, hey, there's some pretty decent volume to this move. We could have a nice trading day. Without volume, we don't have a good trading day. We've got chop back and forth and very low conviction. Yesterday was different. And we had the CPI this week and the PPI. Both numbers were largely in line with expectations. So as the day unfolds yesterday, here's the tell for us because we use the 1OP indicator. The tell for us is that all the gains from the day had held through the first 3 hours of trading. A compression at the high of the day during a bearish market cycle. So you can see how this 1OP indicator continued to go down. This is normally going to result in selling pressure. You'll see the market come in. Didn't happen. So during this entire bearish cycle, compress, 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 hold all of the gains. No long red candles in here. No major retracement. We tested this last little green candle, never even touched that nice long green key bar. So what? What does that mean? That means that the buyers who were in here, bye bye bye, bye bye bye, bye bye bye, bye bye bye, they're still aggressive. Sellers are still thinking, hey, we're going to test that bid. We've had a gap higher. We've seen selling pressure the previous day. Keep testing that bid. Wham, 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 wham. By the time you get in here, they're thinking, you know, that bid is pretty dang strong. I'm not going to keep hitting those bids. In fact, because I can't get anything going on the downside, I'm going to start buying back some of my short positions because it doesn't look like we're going to go down. All of these gains have held so far. So now we get a bullish 1OP cross in here, and perhaps I can drag this up a little bit so you can see it. So you get that bullish 1OP cross right in here. Now we've got a nice bullish cycle, and the market lifts off. The market goes higher. Right about in here was the previous day's high. So then we eclipse that. You can see how during this little dip, which is almost a bearish cycle, you would expect to see some selling in here. Huh, here we go again with this compression. All of these gains to this point of the day have held. No matter how hard sellers try, they can't deter buyers. Another bullish cross in here. See you later. No long red candles anywhere in here to be found. Excellent volume. Really good volume on this rally. Finally, buyers have emerged, and we had a nice technical breakout through that downward sloping trend line that I showed you. So today, before the market opened, I'd mentioned to everyone, I said, hey, folks, I think this is going to be the best case. I think this is the scenario that's going to play out. I don't believe it's our best case scenario because all of this nice buying, that nice technical breakout that we had on Thursday, those buyers are still going to be around. So what we would like to have on the open, and we gapped down, that was the opening price today down here. What I wanted to see very badly was drift lower, drift lower, drift lower, drift lower, kind of like this with mixed overlapping candles. That tells you that buyers are still around. And then to see a support level form, because sooner or later, these buyers were going to come back. And then that first little wimpy move down would have given us a really nice entry point for longs. That would have been our best case scenario because we would have had that nice trade to the upside. But we don't always get what we hope for. The most likely scenario, and I mentioned this, is we're probably going to bounce right on the open because of that strength. Yesterday, we're going to test the upside. So boom, 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 boom. Here we go. Off to the races. Oh my gosh, the buyers are really interested here. Well, the volume was decent. It wasn't overwhelming. But here was the problem. We've got this big spike up in the 1OP indicator. This is cresting. This is telling us danger, danger, danger. There's a move coming. So if you had bought in here, this is telling you take gains. This indicator is predictive. This indicator is early, and it helps us gauge the strength or weakness of the market. And it moves in cycles. And so we can time our trade entries based on these cycles. So here we go. Here's the bearish cross right here, right here, right on that bar. Not here, not here, not here, right here. when there's blue skies, everything's sunny, the birds are chirping, this is going to be a great day for longs, it's telling you beware. Then you get your nice long red key bar that incidentally takes out all of these gains. You talk about a bearish engulfing candle. Whoa, doesn't get much bigger than that. Big volume. And it takes out the open and the low of the day. Just that one long candle. Okay, folks, we have all the information we need. This is a major warning sign. Any retracement into this long candle is going to be a short. We don't even get to the halfway point and whacka, 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 sellers are right back at it. During this decline, during this bearish cycle, you can see no long green candles. Buyers can't get anything going. Why not? Because sellers recognize that and they are offering, offering, offering. When they can't get filled on the offer, they want to sell any little bounce, any little bounce. They want to get short. More, 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 more. And when they can't get that little bounce and they can't sell at a higher price, they start lowering their ask price until eventually now they're chasing. Now they're hitting bids because they want to be short. And that's what happens. And that's why you never get any kind of lift. There's no bounce because sellers are active and those are the tells. That's why it's so important to learn how to read price action. Sure, you get a couple of green bars in here and there's some tails under body. And so this is all interesting and maybe support is forming. So you get down in here and we did have to use a little bit of caution today on the short side. Why? Why? Because the market has been in a 1 month rally. So that is the trend. You do not want to be picking tops. So yes, all right, well, we had really decent volume the previous day and a breakout to the upside. So right here on this 1OP bullish cross, you wanted to be passive. You wanted to take your gains. Let's see what happens. If this bullish cross runs without any upward movement in the market, then we know the selling pressure is heavy because normally when we get a bullish cross, like here, we are going to lift off. When we don't, bullish cycle, market leaking oil, then we know this bearish cross right in here, it is going to be golden. And here's another kicker for those of you who are just learning how to trade. I love trading against people who are learning how to trade because their thought process is, I want to buy a bounce. I want to buy a bounce. Look how good the rally was yesterday. That's what I want to do. They are oblivious to the significance of that long red candle off of the relative high. So while they're in here looking for bounces, they're saying, oh, look at this. This is nice. Yeah, they try to bounce it there, try to bounce it there. This is good. We're forming support. There's tails under body, mixed candles. This is a weak drift lower. But they don't have what we have, which is this indicator, which tells us that the price action we should have seen on that kind of move, if there was steady buying, would have been nice bounce, stack green candle, stack green candle, stack green candle, and try and challenge the high of the day on a nice deep cross like that. When you don't get it, that is a huge tell. And in fact, I posted in the chat room, I said, watch this. What I'd like to see right in here as this bullish cycle runs without any pop in the market, we've actually seen a slight deterioration. What I would love to see right here is I'd love to see a long green candle, because what that long green candle does is it spooks shorts. So they have to cover because all these nice gains that they had hanging on and hanging on to their position, whoop, gone in an instant. But the more important thing that happens is that bullish speculators who are looking to buy dips are going to come in and then they're going to get the door slammed in their face. And so this candle right here, which I was hoping to be a little bit longer, never got there. Whap. As soon as I saw that knockdown right there, we had our bearish 1OP cross. See you later. Now you can start to see some stacked red candles. Well, how does this happen? What the heck is going on with that? No momentum, no momentum. All of a sudden, you start to get some organized selling pressure in here. Well, again, it has to do with a 4-week bullish trend that's been taking place, and that means that buyers are conditioned to buy the dip, buy the dip, buy the dip. So they're buying the dip, they're buying the dip, they're buying the dip. When they finally start to see that strategy fail, they start exiting their longs. Bullish speculators who were hanging on for dear life, going, gosh, I hope we find support. Gosh, I hope we find support. Maybe here, maybe here, maybe here. When they don't get it and they start watching their P&L go lower and lower and lower, they finally hit their breaking point and they puke out of their positions. And then you start to get some organized selling. Buyers also look at the chart and they go, hey, you know what? I wasn't that crazy about buying in the first place. That's why the volume was light. Now you're asking me to buy at a relative high. I don't think so. Not after I see that. So bids are pulled. That means the bid is softer. Buyers are starting to throw in the towel. Get a nice little bounce in here. Got a little bullish cross. This is likely to be a bearish trend day because we've already seen the selling pressure. Was there any kind of significant news out there that causes me to feel this way? No, the CPI and PPI were pretty much in line. If anything, the earnings from bank stocks are pretty decent, although these are the large multinational banks. I believe that the domestic problems are going to be more concentrated to the regional banks. Regional banks will report earnings next week. And the financials tend to dominate the first week of earnings releases. We're not really going to hear from the major tech companies. Yes, there's a sprinkling of a few tech companies in the next 7 days or so, but the majority, the behemoths, they're going to be reporting in 2 weeks. And typically the market bid is pretty decent into those mega cap earnings. And those have been leading the charge out of the S&P 500. I believe you can attribute all of the gains to 8 stocks in the S&P 500. Very, very concentrated bounce. That's also not a healthy bounce. So, am I particularly bearish? No, I'm really more neutral on the market, but given the fact that we've run up to the high end of the range, up to the extreme right here, given that there's resistance here, given that this is all light volume stuff, yeah, I believe there's a good chance for us to retrace to those major moving averages. So my thesis is still intact, and I believe we could see a nice little pullback for a week or so, gets us down to that level, and then there's probably a decent bid into mega uh, cap earnings towards the end of April, beginning of May, and the market finds support, and then we'll see what kind of rally we get out of it. But if we zoom out, there's really nothing here to excite you. I mean, there's the high end of the range. If you clip out the August high and you take out the October low, this is the range right here. Connect all those highs, and then you can connect these lows. And you can see this is pretty much the range right in here. Go up, go down, go up, go down. Time is of essence. Credit concerns are going to be resolved over time. Inflation is going to be resolved over time. The Fed has not eased yet. They don't plan to in 2023. They might stop hiking interest rates, but interest rates are going to remain elevated. That means that we've got tighter credit conditions. Right now, we're starting to see some signs of economic weakness. Initial jobless claims have started to move higher. ADP was weak last week. Job openings measured by JOLTS was weaker. All the official PMIs from Asia and Europe, not that great last month. So the impact of all the interest rate hikes that we've seen over the course of the last 8 to 10 months are finally starting to cycle through the economy. Well, does that mean that anybody's in go-go, gotta have it mode? No, this range is likely to continue. So that's why we're going to stay relatively conservative. We're going to stay short term. We're going to look for opportunities that line up well for the next week. I hope I'm able to pick better than I did with Caterpillar. So let's see if we can find a decent short and a decent long. I'm going to do this very quickly because I am going to do a video on Sunday night, and I'll take a look at a few more stocks that might be setting up well. So as far as what I might like today, I am going to go into Pop Bull, which is one of my favorite searches. It is a swing trading search. Before we day trade anything, we like to know that we have strength on a D1 basis. This is not a widely known name, but it is a nice chart pattern. Yes, it is a choppy stock, so you have to pick your points, but you can see this was a really nice breakout. Breakout through horizontal resistance, checks the breakout, great. Buyers are still there. Gap is preserved above all the major moving averages. Excellent volume, good relative strength. Okay, we move higher. Now we start breaking through some longer term downtrend lines. We can zoom out and see where those are. And you can see now we're through that downward sloping trend line and we've got some room to run here. Yeah, I like this stock. ITCI, I don't know much about it. I do know that it has some decent relative strength. So today, with the market going down, 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 it has a pretty decent bid and better than average volume. Relative strength is what we look for. Would I buy it right here, right now? I'd like to see better price action from the market. And when the market does actually bounce like this, I want to see some liftoff in the stock. So I like this, but you have to wait for a bullish market backdrop. Then I think this stock will work really well. Let's go into some of our bearish searches, and I kind of know what I'm looking for there. So I'm going to go into my bearish SMA cross. And this search looks for stocks that were above the major moving average yesterday and are below a major moving average today. Baidu is one of them. And you can see the selling pressure today has been excellent. And then we get this tiny, tiny little bounce with the market. And now you can see how the market is reversing. And look at that, just in time for that bearish cross. Remember, I was mentioning to you, got a little bullish cross. We'd like to see better height and depth to these crosses. But right now, this price action is telling us we need to favor the short side. So this bounce was pretty short-lived, and now we've got a bearish engulfing candle is going to take these three out. So yes, the thesis for a downtrend day is still intact, and now we're going to have this bearish 1OP cycle working in our favor as well. So yes, I think that the market's going to close on a pretty soft note today. Baidu, what's that daily chart look like? That's pretty nasty. So your key for Baidu is you absolutely want to stay below the 100-day moving average because that also puts us below this low plus trend line. By the way, all the trend lines are automatically drawn with our new trend line drawing feature. So we've broken through this low plus trend line. We've broken through the 100-day moving average, and we've done that on decent volume. Today we are testing that 200-day moving average. So next week, when you're looking at Baidu, you want to make sure that it is weak relative to the market, and you want to make sure that it is below that 200-day moving average. If it is, that will also be taking out this horizontal support level right here on the open of that long key bar. And you can see how that also coincides with horizontal support all the way back in here. So this is kind of a significant horizontal support level, but then it's got a clean path lower, and this is some pretty heavy selling pressure. Down, down, down. So when you're flipping charts, it's important to have in the back of your mind, nice selling pressure. What has the market been doing? The market's been up, 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 as I recall. Yes, the market has been up, 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 and the stock is down, down, down. Market's been up, 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 and the stock is down, down, down. That is relative weakness. There are institutional sellers in this name. That's our edge. That's all I got for you today, but we're going to see you Sunday night. I think those are a couple of good picks that work. We'll see how the day plays out. Hopefully, I'll be telling you that this was a bearish trend day and that we made a new low of the day when I do that video Sunday night. Thanks so much for watching. We'll see you then.
Thank you for watching this YouTube video. I'm Pete Stolzers and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.